morning, investor. Welcome to SET Digital Roadshow for Q3 performance of PTTEP. First of all, I would like to introduce our management and a member of investor relation team that would take you through the presentation and answer your Q&A in the Q&A session. The first one is Kun Samsak Satchawanakun, Senior Vice President taking care of the Finance Division.
สวัสดีครับ
And the next one is Kun Natapon Techawaraphon, Manager of the Investor Relation Team.
สวัสดีครับ
And myself, Sirnas Sanuhanakan, the Senior Officer from the Investor Relation Team as well. And today's agenda, we will firstly start with the company and strategy overview, followed by the business update and financial part. And at the end, we will have the Q&A session. So if you have any question, you can leave the message in the chat box or raise your hand. And without further ado, I would like to hand over the floor to Kun Samsak to start with the first agenda.
ครับ Good morning thank you ครับ for joining us to the update of quarter 3 this year. At the end of the last quarter, PTTEP has market capitalization at about $14 billion. According to the interim dividend payment in August, the calculated the dividend yield at about 8%. Okay, and following the key strategy of our company to be the national oil company providing energy security, so we can increase our production and maintain the gas supply capacity with the market share of 83%. Talking about the sale volume growth, by the end of this year, we forecasted our sale volume closing at the 510 to 515k barrel of oil equivalent a day. So this is about the 5% increase from last year 2024. So the volume mix still to be a gas majority at 70% and liquid about 30%. Looking at the key challenge in unit cost, so our company trying to optimize the unit cost. We're doing our best to decrease and synergize a lot of the operation with initiative. So we believe we can maintain our unit cost at $30 per barrel. So this is competitive cash cost at $15 per barrel. The rest is normally is the non-cash DD&A portion. So our credit rating maintain unchanged since the beginning of the year. Next ครับ Some of you may familiar with this page of the key strategy pillar. As earlier mentioned, we be a national oil company. The key focus is to ensure energy security to Thailand, as well as expand to international growth to make the value creation in our portfolio. So still remain in the key 3D. Mainly is the drive value in E&P business. We believe in gas as the energy destination, especially the long-term gas supply in Thailand to ensure Thailand energy security, where the country still need a lot of gas. We are the country with the net import of the LNG. So gas is very important and every barrel counts. So that the drive value to our portfolio, as well as expand the international growth for long-term sustainability. So basically, we allocate our budget about 97% each year in this portion to make the competitive lean operation and to maintain the production and expedite key development project within our pipeline. So the rest is the decarbonize and diversify. So it is very important as well for us to produce cleaner gas. So reduce the greenhouse gas, as to pursue the net zero pathway. So we already sanctioned and FID the carbon capture storage or CCS in our Gulf of Thailand in Atit asset. So that will be part of the decarbonize and diversify to capture and monitor the future energy as a long-term sustainable production as well. Okay. ครับ So look back for the past 9 months, we have key progresses and achievement in both local Thailand and international, mainly in the Middle East and Algeria. So first, talking about the local Thailand, in early of this year, we acquired additional stake in onshore Sin Puhom project, so making us have the majority interest of 90% in this Sin Puhom project. Another local Thailand acquisition in Malaysian Thai Joint Development Area A18. This is the existing project run by the Hess and Petronas. So we acquire 50% stake there. So gas supply to Thailand at the 50% as well. Then another key milestone in growing in Middle East, especially in Algeria, we can complete the deal of the gas project in Algeria Towards project in September this year, as well as been awarding the exploration Lekene 2 block that close to the Algeria Towards project. This Lekene 2 exploration, if successful, the project can tie in to the Algeria Towards project to produce the gas through the pipeline of the country. And another decarbonize project is the CCS. We make the final investment decision FID, okay, to prove that the first sandbox CCS project can be proven and monetized as the pilot project in the country. So this is our challenge to move forward to the cleaner gas producer in Thailand. In addition, still, by this year, we made a lot of the final investment decision to growing and expansion of the production in Middle East, especially in Algeria. For the Algeria Hassi Balages, with the existing production of 17,000 barrels a day. So we make the FID to develop the phase 2 with the capacity of the 30,000 to 60,000. So this is the key milestone of growing our business in Hassi Barages. Another FID in UAE is the Abu Dhabi offshore 2 or the WASET. We plan to make the FID by end of this year. And our neighbor country, we make the FID for M3 in Myanmar. This is the project that will supply gas to the domestic Myanmar. And in Malaysia, we're talking much about the greenfield that we can monetize from the discovery gas field in the Sarawak area, namely the Silung and Chanda. This is the oil project that we will make the FID first, and then next year we're going to FID the rest of the scatter gas field project in Sarawak area, Paprika, a lot of name there. We target to make FID as well. So this is the the effort and the growing business to our strategy that as mentioned earlier, the immediate contribution from Sinpuhom or Malaysian Thai Joint Development Area A18 or even the Algeria tour altogether can contribute the production in our portfolio and sale volume immediately. So totally with the net sale of about 30,000 barrel of oil equivalent a day. So this is in the inorganic growth that we're trying to bolster and boost up our sale volume growth in our portfolio. And as already mentioned, a lot of development project in our hand that will contribute the first production in the near 2 or 3 year term. So we ensure that our company, will keep strengthen the core production and expand growth in our energy, especially in gas portfolio. So this is not only ensure the cash flow, and we can manage to ensure the return to shareholder, and also we commit to manage the pre-development project to be deliver the first production as planned. This is not include the Lang Labra project in Malaysia yet. This Lang Labra project, will have the more clear field development plan in probably next year. So we will communicate the Lang Labra project soon when we can finalize the new field development plan. So altogether, we revise the work program budget in 2026 next year. So we will launch the meeting and communicate to investor likely to be the first half of next month. So that's all from my part. So over to Kun Nattapon, for the detail of the progress in our portfolio.
Thank you, Kun Sermsak. So now we are moving on to the E&P portfolio, which remain our key and core business for PTTEP. We try to expedite development, maximize the value, and drive the growth in the future to ensure the sustainability of the company. In Q3 of 2025, Thailand's and MTJDA or Malaysia Thailand Joint Development Area still remains our main contributor of the sales volume at around 71%. All the key fields G161, G261, S1, Artit, Sinpuhom, and Contract 4 has been running as normal to ensure the production plateau of the projects. During Q3 in late July 2025, we have additionally acquired, as Khun Somsak mentioned, MTJDA A18 projects 50%, which is in the Malaysia Thailand Joint Development Area, which immediately increase our production and also the reserve addition to the company right away. This is in addition to the projects that we already have in MTJDA B1701, also 50%. So now we are having 2 projects in MTJDA area. In exploration part for Thailand, we have G165 and G365 that we plan, and the exploration activity is still ongoing for these 2 projects. In Q3, 8% of our sales volume come from Myanmar from 2 producing gas field, Sotika and Yadana, also running at the normal capacity. As Khun Somsak mentioned, we also have another gas field that we are trying to monetize, which is M3. The FID is expecting soon in order to have the first gas in 2028 to supply the domestic market for Myanmar. Another 8% of sales volume from Malaysia. All the producing blocks, Block K, Block H, SK 309, 311 have been running as normal as well. And also in Block K, Phase 3B have been achieved the FID for a project, the production ramping up, which is target by mid of next year to add more 20,000 barrels of oil per day, starting from mid of next year from this Block K. Also, several discovery in Malaysia in Sarawak area, SK 405B, 438, 417, 410B Paprika. So we have a smaller marginal discovery back in the past that we are now trying to develop it together as a cluster to maximize the benefits of the projects. The FID is target towards the end of this year or early next year in order to have the first gas for our first production in 2028. And for SK 410B Lang Laba, which is based on the massive gas reserve of around 5 trillion cubic feet of the gas discovery back in the past. Now we are trying to do the re-engineering in order to prove the concept of the development in order to maximize the return to the company and to shareholder. And we expect to have the clearer picture on the decision of the way forward next year. Another 10% of our sales volume come from Middle East. Now the contributor from Oman, Block 61 and Block 6, that we are trying to maximize the production from these 2 projects. In UAE front is both of the UAE Gasha and Abu Dhabi offshore 2 are in the development, which will provide the production to the company in the future. Another 2% from Africa, currently from 2 oil fields and 1 gas producing field in Algeria. On the oil fields, Algeria 433A, 416B, and Algeria HBR that have been running from the beginning, and now Algeria HBR will push forward on the FID in order to have the HBR production ramping up from currently 17K barrel per day to 30K barrel per day and 60K barrel per day in 2029 and 2030 respectively. In Algeria 2 we have completed the acquisition in September. So the production from the project and also the reserve from the project have been added to the company in Q3 as well. Algeria Reckonate 2, which is the exploration phase, we have been awarded together with the ENI, which is the operator of the projects, now is progressing toward the PSC effective net by the end of the year before we do the further exploration activity planning and also the exploration activities. In Mozambique Area 1, now the operator or Total now considering the timing for the full startup restart of the site construction after it have been on the force majeure since 2021, and we expect the first gas in 2029. Now 28 or 29. Now moving on to the Artist CCS project. Now is on the decarbonization front. Artist CCS project will be the first and pilot project for Thailand on the CCS that we would like to put the CCS concept to the Artist gas producing field in the Gulf of Thailand that we are the operator. The total capex expenditure for the next 5 years for this CCS for Artist will be $320 million in overall, and we already made the FID in Q3, and we expect the first CO2 carbon dioxide injection in 2028 with the maximum capacity of up to 1 million ton of CO2 per annum starting in 2028. This project will be the pilot project and have been supported by the government under the Nationally Determined Contribution Plan, Action Plan, or the plan that to support the net zero target for the country. Apart from this, CCS will be the pilot, and then we can extend further on the CCS to other projects that we are the operator as well, including the CCS as a service in the future. Now we move to the next section, which is the finance. Now I would like to pass on to Kun Siranath.
Thank you, Kap. So for the financial result, in the first quarter of this year, we have reported the net profit of around $393 million, which consists of the gain from non-operating items of around 17 that mainly come from the FX gains. And for the profit from normal operation is reported around 376, which mainly come from is lower by 11% Q-on-Q, which mainly come from the lower average selling price of around 2% due to the global oil price trend, and increase in the unit cost by 1% due to the one-time expense item, which is the GHG&A, and also the higher exploration expense in this period, offset with the higher sale volume by 1% from the higher volume contribution from the project in Thailand, and also the joint development area between Malaysia and Thailand as well. And for each key driver item, I will provide you with more color in the next slide. For the sale volume at the end of Q3 this year, we have reported a sale volume of around 510 kBOD, with majority of contribution come from the project in Thailand and the joint development area in the blue part, and Malaysia and Myanmar in the green part, and the rest of the world in the gray part. And for the volume mix, we have reported our volume mix as gas around 74% and the liquid of around 26%. In terms of the project price, we have reported gas at $5.8 per MMBTU and liquid of around 67.03. Is increased by 1% Q-on-Q, but if you look at the average selling price in the third quarter this year, we have reported as 43.17 with lower 2% Q-on-Q. This is because the portion of the liquid in our volume mix is lower than previous quarter. So when the higher price product have smaller portion in our volume mix, is make our average selling price lower a bit in this quarter. And for the unit cost, we have reported our unit cost at 31.52. Increase 1% Q-on-Q. This mainly come from the one-time expense in G&A, which is the M&A consultancy fee and the IT service expense. and also the higher exploration expense from the dry well write-off and 3D seismic acquisition in this period, offset with a lower DD&A by 1% due to the added reserve in project in Thailand. And for the cash cost, which is the unit cost excluding the DD&A, we have reported it around 15.83 USD per MBOE, which means that every barrel that we have sold at around average selling price of around 43 to 45, we will get the cash margin of around 28 to 30 USD per BOE, which contribute to the high EBITDA margin and the solid cash flow in the next slide. For the EBITDA margin in the first 9 months of this year, we are able to maintain the high EBITDA margin at 71%. And for the cash flow, we have the cash flow from operation of around 4.7 billion. And after deduct, which is sufficient to support our tax payment and the investing activity, including M&A and the CapEx investment. And our free cash flow is still positive of around 112 million USD. Our net cash flow may be negative mainly due to the payment of the dividend of around 1.1 billion. And after factoring all items, our ending cash will be around 2.5 billion. And when combined with the short-term investment, we will get a cash on hand of around 2.7 billion. That's more than sufficient to support our growth as planned. And for the financial position, our total asset had increased around 600 million from the increase in our investment in CapEx and also M&A. Our equity is also increased by the 9 months net income offset with the dividend declared. Our debt profile, we still be able to maintain our low gearing ratio with the ratio of around 0.25 and the debt to EBITDA of around 0.64. We're still under our policy of not more than 0.5 for DE ratio and not more than 1 for debt to EBITDA ratio. And for our average cost of debt is nearly 4% with 100% fixed rate. So the fluctuation of the interest rate has no significant impact to our performance. And for the next slide, is the dividend payment. We have the policy to pay dividend not less than 30% of our net profit or the 30% payout ratio. But in this the first half of this year, we have declared a dividend at 4.1 baht per share, with considering around 57% payout ratio. And if you look back at the past 5 years, our average payout ratio is around 50%. This is more than our policy because we're also looking at the other factor like the competitive dividend yield and the absolute amount to the shareholder, and also considering the cash requirement to support our growth as planned. And for the next one is the financial outlook. In terms of sale volume, we expected that our sale volume full year 2025 will be in range of 510 to 515 kBOED from the higher contribution from project in Thailand and also the joint development area. And in terms of the gas price and the unit cost, it will be stabilized at 5.8 USD per MMBTU for gas price and 30 USD per BOE for the unit cost. And in terms of the profitability, we'll expect that our EBITDA margin will be in range of 70 to 75%. And that's the end of our presentation. So we will move to the Q&A session. So if you have any question, you can leave the message or raise your hand.